Welcome to the Stockercade's Dividend Safety Assessment Series. In this video, we will have a closer look at ABBVIE's dividend safety profile, following the release of their fourth quarter and full financial year 2020 results. ABBVIE is operating as an independent company since early 2013, when it was spun off from Abbott Laboratories. ABBVIE is a drug company with a strong exposure to immunology and oncology. The recent acquisition of Allergan has added several new drugs in aesthetics and women's health. The company's top drug, Humira, accounted for approximately 43% of ABBVIE's total net revenues in 2020. ABBVIE reported full-year diluted EPS of $2.72 on GAAP basis, and full-year net revenues of $45.8 billion, an increase of 37.7% on a reported basis. ABBVIE is very popular among dividend and dividend growth investors for its relatively high dividend yield and its strong growth. Let's have a deeper look at ABBVIE's dividend safety. The primary scores are Earnings Payout Ratio of 97%, score 0. Free Cash Flow Payout Ratio of 59.9%, score 1. Return on Invested Capital, 4.9%, score 1. Net Debt to EBITDA. ABBVIE took on a considerable amount of debt to acquire Allergan. Their net debt to EBITDA ratio is 5.2, ABBVIE scores a -1. Operating margins versus industry, positive 12.3%, score 2. Dividend growth years. Even though many consider ABBVIE to be a dividend aristocrat, we will count their dividend distributions as of their spin-off from Abbott. ABBVIE has been paying and growing its dividend since its spin-off, which results in 7 years of dividend growth. ABBVIE gets a score of 0. The secondary scores for ABBVIE are 5-year average EPS growth, 8.7%, score 1. 5-year average sales growth, 12.2%, score 1. Average analysts' estimated EPS growth next year, 10.6%, score 1. Average dividend growth past 5 years, 17.9%, score 1. Dividend in market downturns. ABBVIE increased its dividend during the COVID-19 market downturn, but we would need further confirmation on their ability to grow their dividend during a recession, score 0. S&P rating, BBB plus stable outlook, score 0. The total score for ABBVIE is 7, which makes it a 3-star dividend stock, but only 1 point above the 2-star level. ABBVIE's current free cash flow payout ratio seems to signal that the dividend is quite safely covered. However, 2 points have to be monitored very closely. Their ability to lower their debt levels in the coming year, and how well other marketed products are performing in order to further diminish the company's dependency on Humira, for which they will lose exclusivity in 2023. We are pleased to see that ABBVIE's total net revenues from Humira already declined to 43% from 61% in 2018. Overall, we remain confident in the future prospects of ABBVIE. The company has been rewarding its shareholders with a generous dividend even through the market skepticism surrounding Humira's upcoming loss of exclusivity, which drove the share price considerably lower. Investors who took advantage of the negative wave have seen great returns. We plan to hold our shares in ABBVIE for the foreseeable future.